Kevin, I just want to get right to it here because we saw the S&P close back below that 2,800 level for the first time basically since July. And that was kind of the ceiling that we have been bumping up against for quite a few months. And once we broke through it, everyone thought it was going to be smooth sailing. From a technical perspective, how significant do you think it is that we close back below that level?
I don't know that it's real significant, but from a technical point of view, and I'm not a technician, but what I will say is that market events that are measured over hours and days of corrections, let's call it, they're very, very normal. So we would expect to see some volatility in the short run. And where investors have to be careful is knee-jerk reactions. So getting out of the market, let's say, on the way down. Remember, once you're out and then the market it remains volatile, it can remain volatile to the upside too.
Yeah.
So the one piece of advice I have to people thinking about what to do with their portfolio here is not to make knee-jerk reactions, because you could find yourself out of the market against a market that's then flying in your face. If you're looking to trade, it's very, very difficult.
All right, so Kevin, you don't want any panicky selling on the heels of this. So I want to do a poll, since we heard from Gina Martinez of Bloomberg Intelligence, Jonathan Gollop of Credit Suisse. Both of them were saying this is probably going to be a buying opportunity. Do you agree with them?
Well, we're looking at it that way. I'll just speak in the first person here. We have a list at Washington Crossing of stocks that we have wanted to own, very good companies with great balance sheets, consistent businesses, but they've been too expensive for us to purchase. So we're one of those managers that's now looking at this and really kind of getting interested, because suddenly the stocks that were not priced to return very much are now starting to look better to us. So we'd be more inclined to put money to work here than pull it out. And it's been a while since we've seen prices come into us to make the proposition appealing. So this is actually kind of a good thing from that point of view.
All right, well, why don't you give us some names? Where's the value?
Yeah, well, essentially, when we're looking around, we're seeing we're not seeing it in tech yet. Broadly speaking, we are seeing things in the consumer staples area. It may be a little bit early for utilities, but the backup in yield to us is somewhat interesting. Obviously, I can't give you specific names because we're actually looking to purchase them. But the general characteristics would be companies with very, very consistent cash flows, because we are late in the cycle. Very conservative balance sheets. We want to see less than 30% debt in the capital structure. And we like the idea that companies are raising their dividend year to year to year. We think that points to quality. And at this stage, we want to be moving up the quality spectrum in the portfolio.